author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the September 11th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a wonderful Wednesday. I know I did. And let's make sure that you and I, that we do everything in our power to have one heck of a terrific Thursday out there. I know that during the next couple hours, I'll do everything in my power to help you utilize tools, great tools, extraordinary tools. They help us identify where price is headed to. We'll utilize that lightning bolt pattern. That's that A to B equals CD tool. Look at Fibonacci. Expansions and retracements, the two of those combined are what create those butterfly and Gartley patterns out there. We use Japanese candlesticks. They help us to understand what the buyers and sellers, what the bulls and bears are communicating to you and I each and every day. We'll use every tool that we've got in our arsenal out here. Of course, this is a interactive show. That means you can give us a call at 877-927-6648. Love to hear from you. Before we begin, let us always remember, folks, let us always remember that a leader is one who knows the way, goes the way, and shows the way. And I'll do everything I can to show you the way this morning here. It is Terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show. It's time to get kicked off here. Right now, we've got Dow Futures. They're trading up 74 points, trading out at 16,984. S&P Futures down 8.5, trade at 1986. NASDAQ Futures off about 15, trade out at 4,077. Of course, we got contract rollover, so these numbers will be a little bit different. Those were the September contract. Today, we roll over to December out there. If we take a look at the metals market out here, flat session. You got Goldilocks up 20 cents, silver back 18 pennies, so not so flat out there, off about 1%. Light sweet crude trading out at 90.85, that's down 82 cents out there. If we take a quick peek across the globe, let's go see what kind of party they're having over as they begin Septemberfest, right? Getting ready for Oktoberfest over in Germany. We've got the DAX down about 52 points. The FTSE off 44. Nikkei was up 121 points last night. The Hang Seng off 43, down about 0.2%. Not a big deal out there. The Shanghai off 0.3% as well. It closed out at 24.20. All right, so let's begin our day. Let's actually go see what went on. Let's go on overseas right now. Let's take a look at the FTSE out here. Again, inside the FTSE struggling to break out of a long-term consolidation. It has rejected those highs, but for the fourth time or so. So those are important highs for us to continue to monitor. That's right around the price level of 68, 67, somewhere right around there. If we do take a look at the FTSE and see what we've got going on as far as its current pullback, its current retracement, we'll go from the low. The low out here happens to be August the 8th. The high was put in on the trading session of September the 4th out there. That gives us a retracement down to 67.61. I suspect we'll see the FTSE get down there. That's just a dead cat bounce, really not a big deal out there. Getting back to 66.72 would be a normal move. But first floor on the way down, 67.61 inside the FTSE, which is one of the weaker indices out here. Weaker from the standpoint of not being able to bust through a consolidation level. If we take a look at the DAX being one of the stronger of the indices out here. If we take a look at what it is doing at this moment, we know that the DAX had made a 0.786 retracement. What do I mean by that? That means if we go back into the level of June 20th, we go from that swing point high down to the low on August the 8th, you'll see that the DAX got very close to the 0.786 retracement. That target was 98.05. It actually got up to September 8th's high, which was 97.73. Now, what we have seen is we've seen the leaves begin to fall off the tree. Now, retracement-wise, so far, not much in the way of damage out here. In fact, the first floor, the dead cat bounce, that 0.382 retracement level, that would take the DAX all the way down to 94.41. So you're trading right now at 96.45. So not much damage at the stage of this game here for the DAX. No reason really to throw in an A to B equals CD to the downside and give you price projections, because the DAX hasn't really moved that much off of its recent highs out here, and no wide-ranging bar or anything along those lines. line. So, starts getting below 94.41, then we can start taking a look at that pattern out there. Let's go to our markets. Let's take a look at our daily charts out here for our markets. What do we know? Let's start off with the Russell 2000 futures contract. Here we can see its consolidation level, about a 130-point move from 1075 to 1203. So you got about a 30-point move out there. Of course, we know that if, in fact, ever we see a break of that 1203 level inside the Russell 2000, that will take us up to 1350. That will complete that 16, 17, 18-year consolidation on the monthly chart for the Russell 2000 futures. That is its ultimate goal, is to get up to about that 1350 level. If we take a look at what it's doing right now, and we take a look at its retracement, and this is one of the weaker indices, right? This is the weaker indice inside our market. So if we go from the low out here on August the 1st, notice that it was not August the 8th when it put its low in here. And we take a look at the high that was put in on September the 3rd. What we'll see is price yesterday got down to the 0.382 retracement level and rejected that area. As we speak right now, it's just visiting that area one more time. 1145 is the number to key in off of today. It closed below 1145. That's your TAS market profile low. That's your significant support area out there. A break below 1145. We very likely see 1130 out here. That would be your 0.618 retracement. And there you've got a Gartley buy pattern. What do I mean by that? Well, you know what I mean by that is I've got to get the tool back up on my screen. Otherwise, it becomes very difficult to actually draw that in for you. So just remember that 1145 level. Let me get rid of the A to B equals CD to the upside out here. Let me delete that. Now let's come take a look at the A to B equals CD to the downside inside the Russell 2000. And that'll take us down to a price point of the 1-to-1 is 1139, 1132, which is your 1-to-1 0.272. That gets us into that 0.618 retracement. That is what I suspect we are taking a look at, the Russell 2000 getting down into that area. Let's take a look at the Dow out here. We take a look at the Dow. What do we know about the Dow? The Dow broke above just slightly. It's what is it? July 17th high, but really no conviction. A lot of small-bodied candles along that area. That means that the market was tired, losing its way out there. Of course, if we take a look at this futures contract and we go take a look at its retracement levels, we're going to see at this stage not much in the way of damage out here, and that's going from the low to the high. So far, not even close to the 0.382 retracement. 16,792 is the number. You're at 16,980. So what does that give us? 16,880. So it's another 80 points or so before it would get down just to the dead cat bounce level. Key levels to be watching inside the Dow futures today: 16,934. That's its daily unfair low in the market profile. TAS market profile, we have not even seen price test that area. That's the daily contract for the Dow. So just to kind of keep things in perspective, it's always good to do that when you take a look at these chart patterns and you see what's really going on inside the markets. Let's go take a look at the S&P futures. If we look at the S&P futures and we take a look at its retracement from its low on August the 8th up to the high that was put in on its contract on September the 3rd out here, retracement thus far, nada, not much. Not close to the 0.382 retracement. 1964 is that number. You're trading at 1986 right now. But 1986, just below 1986. Let me see if I can actually get the number up here. Well, actually, I should be able to see it right on my screen. 1985.50. It's been in front of me all this time out here. 1985.50. That's the number for us to be paying attention to inside of the futures contract. Any close below that level out here. And we see that it was tested yesterday. It held as support. Then we're likely looking at a move down to the 1964 level. That's inside the ES Mini. Of course, we saved the best to last, I believe, and that is the just the strong dog out here, and that's the Nasdaq. And the Nasdaq, now the Nasdaq, the real interesting thing about the Nasdaq is the real tug of war. Let me see here if I can do this. I can't really expand it up much more than that. If we take a look at the, well, I guess I probably could by doing this. Let's see if that will do it. Will that do it? No, that doesn't even do it. So I'm just trying to make these bars just a little bit wider for you to see out here. Oh, here's a way Stevie can do it. Oh, he did figure it out. You see, never, ever give up. Okay, now we're taking a look at just kind of a close-in look at the NASDAQ out here. And what we're going to take a look at, two key reversal sessions out here that have occurred recently. So the September 3rd high, that is priced out, by the way, at 41.13. 41.1375 to be specific. The September 9th high, which is a beautiful day in the world out there, for one specific reason. 41.1050 out there. That also is a key reversal session. So right at these highs is the tug of war between the bulls and the bears. And, of course, down at the lows out here, if we take a look at its market profile low, that's at 4,053. That's where the bulls are just sitting there. They are just ready to hammer away. They believe there's good value in coming to the inside of the NASDAQ. And this market just simply will not croak to the downside unless we see some kind of conviction inside the NASDAQ. At this stage here, it's just trading below a resistance level, an old resistance level, which is potentially support, and that's the top of that box at 4,078.50. So you're trading just slightly below. So here is the consolidation that we are trading in, and as long as this consolidation, maybe, to the downside, things get chipped away inside the ES Mini, they may get chipped away inside the Russell 2000, inside of the Dow, just to allow them to move a bit lower out here. But the reality is, until this guy or this gal, whatever you want to refer to it as, until this thing breaks, and you can remember this, on August 6th, August 7th, August 8th, August 9th, and since then, I have been saying, it's all about the NASDAQ. Well, folks, it is September the 11th out here, an important day for us to remember for sure. But when it comes to the stock market, it's still all about the NASDAQ. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Lots of movement inside the currency marketplace, so let's go check in on it. Let's start off with your favorite currency pair in mind. That's the Euro-Japanese yen. As we take a look at the Euro-Japanese yen, if you're watching this on Tiger TV, and I hope that you are, there's so many different ways that you can do that. If you're listening on your radio or your mobile device at tfnn.mobi, thanks so much for doing that. Don't forget, you can go to the homepage of tfnn.com with that beautiful portable mobile device that you've got. Over on the right-hand side, you'll see a button that says, hey, watch Tiger TV. You can click on that. You can watch this show live. You can see our charts in beautiful HD out here. And what you would be noticing is you'd be noticing that the Euro-Japanese yen has been traveling inside a descending price channel out here. And that price right now is trying to poke its head. It's trying to break out above that rising, descending price channel, I should say. And that's going to be an important currency pair for us to monitor. The reason is because it so directly correlates to what goes on inside our stock market out here. If we take a look at the euro-US dollar right now, that is coming up off of the bottom, or it's trying to, but what it's really doing at this stage is doing nothing more than working up an oversold condition out here. So at this stage, even though it's trading higher out here, this wide-ranging bar to the downside that took place on September the 4th out here, all we're seeing are just some narrow-bodied candles, and you can see if you're looking at the bottom of my screen out here, what the euro did was just simply got into an extreme oversold condition. The most bearish thing a market can do when you get into an oversold condition is work its way off by making small-bodied candles out here. You're either going to do one of two things. You're either going to bounce or you're going to go ahead and travel sideways. In this case here, it's traveling sideways. That suggests we have more downside potential inside of the euro. What would change that? What would change that would be a wide thrusting bar, just like we had to the downside out here on September the 4th. And if we see that, then all bets are off to the downside. And finally, Super Mario will have stepped in. But at this stage, not anything that I see out here when I take a look at a daily chart for the euro. Looks like more downside potential. How about that Japanese yen? At Japanese yen, we know at this stage here in the game, it's made a little doji out here. But a lot of time left in today's trading session, so we won't really call today's candle. What is it that we know? We know that the U.S. dollar Japanese yen, that it broke a descending trend line and channel line as it did last time. It was off to the races, and voila, that's what we have going on right now. 107.31 is its 1 to 1.272 target out here. Actually got up to 107.15. That's good enough for me in my book to have completed that pattern. It is also in the extreme now overbought condition. So working its way sideways here for a few days to work that condition up, that would be bullish. Just the opposite of what we took a look at. Now, as the Japanese yen moves higher, the U.S. dollar index will get stronger. So this is the currency getting weaker, U.S. dollar index, and it's about 10%, 10, 11, 12%. The number's fixed. All you have to do is just really Google it, go to Wikipedia. It'll tell you the makeup of the U.S. dollar index, the euro being the largest piece of it. Of course, the three big, I can't really call them bears, right? But the three big pieces of the puzzle for the U.S. dollar index, it is the euro, the yen, and, of course, it is the Great British Pound. So let's go take a look at the Great British Pound. And yesterday, forming close enough, very close to forming a Morningstar pattern out here. So the Great British Pound, actually, this has got more bullish. See how this was also in an extreme oversold condition, but take a look at its candles. Doesn't look like the euro, does it? This is actually a currency pair that's trying to put in a bottom out here, and it's doing itself a lot of good today by continuing yesterday's move higher. It just needs to really clear the September 8th downdraft out here, and that high is 1.6326. But the Great British Pound, definitely what it's most likely doing at this stage, because this was just a linear move down out here. Now, with everything going on in Scotland, I don't suggest really stepping in on this trade unless you want to trade something utilizing the Nadex platform out here. When is that vote? Supposedly, I can't remember when that's going to take place out here. But it's still, I think, it's a linear move. It's a dangerous. I think it's a more dangerous trade at this stage. Or certainly trading intraday would be okay out there. That's on the Great British Pound. Let's go take a look at, hey, you know what we want to take a look at here? Well, we're going to watch like a hawk during the day out here. We had some hammers form out there. In fact, one of the weaker sectors inside the S&P 500. Was that a message or what? In this case here, what we saw was the swing point low. Inside the energy sector, that was on August the 7th. That low out there, 94.49, yesterday was tested and rejected. It was tested and rejected with light volume as well. That was 10 million shares going against 13 million shares, and it formed a hammer candle. That says yesterday's low is very important, 93.81. You see it close below that, you're looking at 91.84, maybe $89.93. But the bulls are out protecting the XLE. This is Steve Rhodes. This is TFNN. It is Wonderful Wednesday. Of course, it is September 11th, so it's a day to remember. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got down off 7. Straight down at 16,999. Composite off 14 at 45.72. S&P down 7 at 19.89. You've got the Russell 2000 off 5 points. Leading the charge to the upside, it is Lululemon up $4, up 11%. Digital Ally, DGLY, up 14%. That's up $3. Energy Focus has got some energy this morning, up 42%. Must be some kind of buyout, or is this an IPO? Let's see. Energy Focus. They received a $7.7 million order from the U.S. Navy combatant ship forces out here, and this thing is off to the race. So we'll take a look at it. Got Tesla up $1.70. JDS Uniphase out here. That's up 14%. I believe they're breaking the company into two. We've got Liberty Global up about 3%, up $1. Finisar Corp up 7%, up at a little over $1. The Hog, Harley Davidson, getting in on the action, up 2%, up $1.32 as we speak. To the downside, you've got E2 Open Inc. It's been opening to the downside in a big way, down 30% out here. Just says sinking on the weak guidance out here. Sinking is an understatement. 21 Vianet Group, VNET, that's off about 15%. That's down $3 and change. Men's Warehouse, MW, down 7% off $3. Identiv, INVE, that's off 3% out here. Advanced Cell Technology down to 24%. That's off $2.60. Five Below, continuing to move below. That is trading out at $40. That's off 5% here this morning. So that's what we've got going on. Going back to the, just for a moment, going back to the energy sector out here, we got that hammer candle that is being tested as we speak. So you've got the energy sector out here. Today's going to be another really important day for it, in that it is now testing that hammer low. That is going to be 93.81. You got to love when hammers show up out here, because they really are areas where the bulls decided to take a position. We'll see if they're going to try to defend that position inside of the markets today out here. There were a few other hammers that showed up inside of the sectors inside the S&P 500. Kind of makes you want to say, something to think about. If we take a look at that, we had one inside of the XLY. Let's go check in on that. Let's see how that is trading. Off a nickel here this morning. The XLY, which is your consumer discretionary sector. That formed a hammer low yesterday. Now, what we can see about the consumer discretionary sector, been very strong out here. It's also got some pretty good support here, a little gap up that took place in it on the trading session of August the 19th. But this has got, even a spike down to its market profile low here at 67.84, which gets you inside the gap here. Still looks relatively strong. But it, too, has a hammer candle. And there was one other one, and that was in one of the weak sectors out here. That was the material sector, the XLB. And remember, we can learn a lot from weak sectors out here. If we take a look at its hammer candle yesterday, that formed, that was after making, in essence, just more than a 0.382 retracement, the 49.88 level. So its hammer candle not being tested. But the bulls are out in force defending this area. The number to watch inside the material sector, the XLB, is going to be 49.61. That's in three of the the 9 sectors within inside the S&P 500. Let's go take a look at some of these stocks here that are popping and dropping. Let's go back and forth. Let's take a look at Lululemon, moving up nicely, out with numbers. I believe they generated revenues. Well, I don't need ranges. Q3 revenue in the range between 420 and 425. Come on. You guys did your books, didn't you? Well, let's go take a look at what the stock is doing out here. Gapping up by getting above a swing point from the trading session of August 26th out here. That had 2.3 million shares. You've already done 5 million shares, so you've got some gusto. Get up in gusto. So this is certainly off the bottom, taking on a swing point here. That would be the B point of an A to B equals CD. So it's got a couple of diverging patterns out here. It's trying to repair the window that got broken. That was on June the 11th as this gapped down with 36 million shares. But with 5 million already in the first 8 minutes of trading, it could overcome that downdraft out here. So the A to B equals CD up pattern inside of Lululemon, that would take you up into a price projection of about 1-to-1 takes you to 45.21. If it closes that window, that'll be no problem out here. It looks like 47.24 could be its next. You got really, no, that's really your only A to B equals CD pattern inside of Lululemon. So it's doing its repair work. Let's pull this on a weekly chart. Let's see if it is also trying to break its downtrend out here as we take a look at Lululemon. We can actually draw in a couple of different lines. We take a look at the real trend line out here. That's going to come off of the high back here, big wide-ranging bar to the downside on June the 10th. And you'd say that that is really the trend line out here. There's some shorter-term trend lines that one could draw, and we could come off of these highs here. But we're going to draw in the channel lines here momentarily. Whoops, how about that? I didn't mean to do that, but I did it anyways. Thought I had grabbed the tool. And so let me try this. Here's another possible trend line inside of Lululemon. So you'd have to say on a weekly basis, 46.78, by the way, happens to be its market profile high. That should be a resistance level inside of Lululemon. I did say we would draw the channel line, so let me be a man of my word out here. As we do this, we're looking for a number of co-located opens and closes out here. I'm going to have to go with right here. That looks like the top of the channel, and the bottom of the channel probably somewhere right in this range out here. So there's your channel line for Lululemon. Let's just go ahead and pull this back a ways. So there is its channel. So here's what we know. We're taking a look at a weekly chart for Lululemon. It's got some resistance at the 46.78 level. If you can break above 46.78, then that sets up a potential move into the short-term trend line right around the $48 level out there. If it could do that, it would say that Lululemon wants to make a run for this level right here. Here's where it's got a open gap to the downside at 57.01. Perhaps as it takes its time getting up there, would also run into the downtrend of that price channel, that descending price channel out there. So that's what's going on inside of Lululemon. That was on the weekly chart. Let's go take a look at 21 Vianet Group Inc. That's off 16% this morning, down $3. This is the weekly chart. Man, that's a wide-ranging bar with volume to the downside. And on the weekly chart, it shows us there is no place that we can locate for support other than this little base that it broke, that it made form back here in 2013. So that swing point says this could get down to $8.88 or so. That is on the weekly chart. That's another 50% haircut. Don't short a $16 stock out here. Please don't do that. A big price spread yesterday, and volume to the downside out here. So, and this thing, where did it find support? You know, there's no volume or anything, so there's no way for me to really give you any kind of great guidance on this other than to say don't trade it. It's not a viable bottom. It's also, in my opinion, it's also not a short. That is VNet Inc. Let's take a look at Men's Warehouse out here, MW, see if they were out with numbers. They generated net sales of $800 million versus $647 out there. Let's see, what do they do on the profit falls? Of course, that's because you buy one and you get 45. In fact, you have to back up the U-Haul in order to go shop at. Is that the Men's Wear? No, that's Joseph A. Banks. Of course, the two of them have combined, I believe, or are about to. I think they've combined out here. In any event, let's go take a look at the Men's Warehouse. Gapping down and finding some support, some folks that think it's got some value in it. Of course, this thing saw some institutional selling come into it on the trading session of July 29th out there. Once you've seen it the first time, you know, there's more behind that move out here. Now, we have seen it move lower today. Volume so far, 1.1 million shares. At first sign of weakness, 6 million shares to the downside on July 29th out here. Let's try to figure out where this might be headed to. If we can take a look at Men's Warehouse, has got a fairly decent support level in the 43-ish to $40 area out here. Let me put this on a weekly chart, see if I can find anything else that looks of interest inside of Men's Warehouse out here. You know, this week, it's really this. It's still the gap. You'd have to say it's just so dangerous with that volume. That, on the weekly chart, there was volume off of the highs, by the way. That was the July 28th level. So your real buy point inside of Men's Warehouse is back to the October 7th breakout area, down around the price level of $34. $46 could find some support out here. But that would be your ultimate. That would be your potential ultimate buy inside Men's Warehouse. All depends on how price would move back into that area. We take a look at Pharmacyclics. That's down. Let's not look at that. That was. Let me see. Where's the Advanced Cell Technology? That's a $51. No, wait. It's a $9 stock. Let's go take a look at it. Ticker symbol ACTCD out here. Talk about. A wide-ranging bar today. Man, this was quite a sell-off just in the first 14 minutes. Intra-session, it got up to a high of $12.73 and sold off. It's now traded at $9.40 out here. Let me see what this stock looks like. So its buy point on this is down around it had a nice breakout back in November 22nd, 2010, and the actual breakout looks to be about the 470 mark. So that area it's a buy area out here. It's got a couple high volume highs out here. So it's kind of an interesting stock. Let me put that's on the weekly basis. Let me put this on a monthly basis. I was looking at the weekly chart. Let me see what the monthly chart shows us for this thing. Ugh, that's disgusting. So this must have gone through a number of stock splits out here, because the monthly chart shows that at one point it never traded up at these levels, but because of all the different reverse stock splits and so forth. But it shows that at one time it traded up at $900. It traded $9.35 right now. So maybe a little bit too wacky out here. You can see on the weekly chart, it's running right into resistance. Its market profile high at the 935-ish type range out there. That's on the monthly chart. Let's go back to some daily charts out here. Let's go back to some other stocks here that are popping. Let's take a look at Energy Focus, the ones who've got that big contract from the Navy out here. Let's go see what its stock is doing. So let's pull this back. So here's a stock with basically no liquidity. I've got a day here, August 20th, that sold 3,500 shares out there. Of course, today we've seen 800,000 shares change hands out here. No real volume in this equity other than today. Hard to really tell you what to do with an equity like this. Let it trade and get some real liquidity in it. Let's go take a look at El Pollo Loco. Let's see. How about Sino Cooking Sinocoking coal, SCOK is the ticker symbol. Did we take a look? Yeah, I think we took a look at this yesterday because it had a wide-ranging bar to the upside. This, too, with no liquidity in it, not until really a few trading sessions ago. 39 million shares. That's some pretty good stock that had traded hands out there. Let's skip over that. Let's go take a look at, as I look around here, how about MySonics, MSON, My Sun is the ticker symbol, MSUN. They generated earnings per share of 18 cents versus a loss of 22 cents, income of 1.3 million versus 1.5 million loss the prior quarter. Interesting. MySonics. Let's go take a look and see what this equity here is doing. So MySonics, this does have a little bit of liquidity in here. Volume in the 40,000. It looks like on average. Let me pull this back and see what it is trying to trade up into. So this is just at it's at all-time highs right now, off of a earnings report out here. As I pull this back even further, let's put this on a longer-term chart and get a feel for where price is likely headed to out here. MSON, My Three Sons. No, it's not an all-time high out here. This had a high back in the 1997 time frame, up at about the $15.67 cent range out here. But on a monthly basis, it's trying to take out a high from December of 2012 that had 1.7 million shares, and you are up and over it with 222,000 shares. Of course, we're early in the month, right? It's only September 11th out here. But this thing, I don't know, not a lot for me to give you as far as information inside of this equity. MSON. Let's take a look at Bit Auto. That's now jumped into the fray here. The leader in the clubhouse on the way down. It's off $2.97 right now. Let's take a look at its chart. You can see this thing has been a Eiffel Tower. This thing has been a rise off the low. This is one of these Chinese stocks out here. Not that that's bad. Good, bad, or indifferent. Did trade down at $4.70 back in October 2012. You're up at the $80.77 range right now. Let's take a look at its daily chart and see what it is doing out here, see if there's any breakout. So this thing has started to move down. It's starting to see some selling off of the highs out here. It made a high with 4.7 million shares, and then it has backed off with 4.3 million shares 2 days ago. Excuse me, I'm sorry about that, 2 days ago. And yesterday, just moved slightly lower on 3.7 million shares. So where's this thing pulling back into? Bit Auto. Here's the problem with an equity like Bit Auto. If it breaks below, it's a daily chart, the trading session from August 21st, it probably pulls back to the price level of about $42. That swing point, by the way, is at about 75.75. Bit Auto, one to watch. Steve Rhodes, TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off about 37 points right now. Composite down 7. S&P is off 3. Russell 2000 down a couple of points. Let's take a look at some things that we want to pay attention to inside of the market. First, let me see what do we have under the sheets out here. Let's take a look at the market breadth. Let's take a look at the decliners versus advancers. So we've got about 1,000 advancing issues in the New York Stock Exchange, 1,700 declining issues out there. So not even a 2-to-1. Nonetheless, you still have net declining issues out here. So summation index for the broader market still turned to the downside. I believe we need 1,858 or so net advancing issues in order to turn that around. So that is still giving us signals of movement to the downside out here. But take a look at the VIX index right now, trading out at 1307. Its 50-day exponential moving average, 1277. Another number to key in off of is going to be that. Any close below that, that would be some liquidity inside the market out here. As long as the VIX stays above that level, it's a market to move lower to slightly lower out here. So that's a second level. We take a look at the summation indexes for the for three of the primary, the three that I can grab at this time. That would be the Dow. The Dow summation index has turned down. The Dow's target is 16,845 out here. That's your dead cat bounce, your 0.382 retracement at this stage. If we take a look at the New York Stock Exchange, it's moved down. It already hit its 0.382 retracement. It did that yesterday by getting down towards the 10,897 level. Actually got down to 10,909. That is close enough in my book. A break of 10,897, we'll see it move down to about the 10,768 range. If we take a look at the NASDAQ composite out here, again, as we talked about during the show, this is the whole linchpin. This is the key out here. It's trading out at 45.80. It is going to be content, in my opinion, even though the summation index has turned down. It's going to be content with just traveling sideways here for a while. The bottom of its range out here is a little short-term consolidation right around the level of about 45, 42, and the top of the range, being somewhere around the 4,600 area out there. Unless we see a break one way or the other, its message is one of trading lower, but just slightly lower out there. So those are the things to key in off of today. Of course, we'll want to pay attention to the currency pair, that euro-yen currency pair out there, which we know is trying to bust through a descending price channel out here. If it does break through that price channel and the VIX dips below the 50-day exponential moving average and a couple other things out there, then you could actually see some kind of bottom having formed. Again, the 3 of the 9 sectors yesterday formed hammer candles. The XLE, the energy sector, so far that hammer candle has held. So we know that there's some bullish support out there. If we take a look at other things to pay attention to, how about the 120-minute chart here for the S&P futures? Now I'm going to put the September contract up on the screen out here, and so that way when you're taking a look at prices, it's trading right now at 1992. You can see it has its own descending price channel out here that has contained price pretty well. That right now, and this is a 2-hour chart, which ends at in 3 minutes, so it's not going to be this session, but it would be the next session. It looks like resistance here ought to be 1994. If it closes above that 1994 level, well, then you can see it move all the way up to about the 2003. Of course, what we really have to do is switch contracts, so it'll be a different figure than that, and I'll have to go figure that out after the shows today. Well, folks, it is terrific Thursday. It is September 11th, so say a prayer to all those families that were deeply affected by this tragedy. In fact, it impacted each of us. There's no question about it. So it's a good day to do something nice for someone. Doesn't matter who it is, but a random act of kindness, that would be a beautiful thing. Thanks so much for joining us. Have a terrific Thursday. I look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.